Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Monday, August 21st, 2023. Before I click through all the charts, please click like if you haven't already and become a Wicked Stocks YouTube channel subscriber. Also, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like the daily Tesla report. Daily analysis in the SPY, the triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% swings on those individual stock picks or more. We also offer a 5-day free trial up front. So if you sign up for wickedstocks.com subscription, you've got 5 days to check everything out that I just mentioned. And if you don't like what you see, you can bow out at no cost to you whatsoever. So on with the charts. Start with the big picture, work our way into the day itself. Just a reminder that, 4 or 5 weeks ago, a month and a half ago, we came off this channel top at 302.97 this week. That had been an objective, actually, a 2 to 3 month target following the settlement about 3 months ago above that 173.86 18-month long-term descending channel top. We tested the 302.97 formation, pushed through it substantially about 5 weeks ago, only to come tumbling back late that week and fell off. And so following the test of that channel top, I've been mentioning that the channel bottom this week at 215.41 should be considered in reach within a month or two of testing the channel top. And that's exactly what has occurred. That channel bottom this week, 215.41. On the daily chart, I can show it at 214.19. So we did not test the channel bottom on the weekly chart last week. It was a little lower than the daily chart. But this week, right now on Monday, we've got 214.19 daily chart channel bottom and the 215.41 all week. And so it is an area that can contain selling. I'm going to say through September and quite possibly the rest of the year. And if we're looking at the big picture right now, it's holding above 214.19. We'll keep, well, I'll just talk big picture while we're still at it. Holding above this channel bottom, which on the weekly chart is 215.41, we'll keep the channel top in reach at 302.97 once again over the next month or two. Now, as you're well aware, markets tend to sell off a little faster than they rally. So what was a 1 to 2 month downside target at the channel bottom at 215.41 is now more of a 2 to 3 month target to the upside. In other words, I'm going to say October, November-ish would be in reach 302.97, the channel top. Now, the levels look a little different because they're based on different price points. This channel top at 302.97 is based on these major lows here going back to January, and then again I believe that was in May, and so off that intermediate high. And inversely, the channel bottom is based on these two extreme highs going back to, I think this is a February high and this is a July high, if you catch my drift. So 214.19 to 215.41, able to contain selling possibly through the rest of the year, and above which that 302.97 area in reach over the next 2 to 3 months. On the way up, now assuming that the low that we put out last Friday is good and we continue higher from here, we still have this 256.48 former long-term rising speed line that we settled below a couple of weeks ago that set off the sell signal near term down to 214.19. That is a completed move now. And from here, we can rally back to the speed line. But more importantly is the descending 2/3 speed line that I'm going to use now as our upward pivot point, on a multi-week basis. So in other words, above 214.19, the 268.94 descending speed line, which over the next week converges with this mid 250 speed line anyway, dropping gradually. I'm going to consider this a 3 to 5 week target, 268.94. In other words, by the end of September, we can reach this 268.94 speed line, and over time it'll be an easier reach, obviously, because this is dropping on a daily basis. So a 3 to 5 week target, 268.94, and we can over the next 2 to 3 months rally all the way back up to that 302.97 channel top. So what does that mean? I think what this really means is that if you're an options trader, for instance, well, what it means right now is you are bottom picking 214.19 to 215.41. That is the area that can hold longer term, and you're going long Tesla in this vicinity. And if you're an options trader, you may reach for 260, let's say, out of the money calls that don't expire for at least, I'd go a couple of months out, 3 to 5 week target. You want to go a little further out than your time horizon objective because of the time decay element with those out of the money calls, of course. And if you're really longer term, you may be reaching then for the 305 or 310 out of the money calls that don't expire for at least 6 months, because once again, this area is considered a 2 to 3 month objective, and you want to go further out in time than your time horizon objective. I'm talking the strike prices and their expiration. So that is like the big picture. Now, I might as well just jump to the downside, that what if we do close below 214.19 on an intra-week basis, closing Monday below 214.19 would indicate this 200.55, 50% downside retracement. That is a 50% downside retracement from the January low to the more recent July high. And we could bottom out here for at least a day, quite possibly the balance of the week. But the critical element, the critical indication would be a settlement Friday below this channel bottom at 215.41 by a 1% margin of 213.25. Now, for risk management purposes, if you're buying 215.41, if you're buying 214.19, I'm not about to tell you that you should hold out for a weekly settlement below 214.19, or a weekly settlement rather below that 215.41 level by the 1% margin of 213.25, because that's a lot of time to wait. In the interim, we could easily drop to 200.55 or lower. So I'll let you exercise your own risk management rules, but just know that if we close below this 214.19 formation, I am expecting 179.26 over the next 2 to 3 weeks. And that is our 2 to 3 week downside target. That is also a significant support threshold that I'll get to in just a moment. But if I were just to clarify, it would be a weekly settlement Friday below the 215.41 formation by the required 1% margin. You do need to add that 1% for, I call it technical clarity or signal reliability. If we close at 213.25 or lower on Friday, the 170s become our next 2 to 3 week objective. And this is also a significant area. I will say we are testing long-term support right now above 215.41, anticipating the low 300 area again or higher over the next several months. And I really don't see this thing cascading south in a big bad way as we move through the rest of the year, unless we actually violate the 170s. So bullish above 214.19 to 215.41 rather, as we move through the rest of the year. And we are bearish decidedly into Q1, Q2 of next year if we were to close this week or any week below this 170s area. So I'll just leave it at that. Now for the day itself, I've eaten a lot of time just covering that big picture. Let's talk about 231.59, this trend line coming off here. That is our session containment level. We're not going to see that today, but I don't like to crowd all these areas. So what I will say, every single one of these minor points has been carefully chosen, and I will mention that if merely pushing above 217.65, and that is, once again, I can go back to the chart here, that is nothing more than that February high that we opened below on Friday. The high was 217.58, so it did hold. There is a gap now, so I will say that merely pushing above 217.65 today should offer follow-through buying to 225.53. You could see that as an intraday level, where we can top out on an intraday, possibly daily basis at 225.53. I was close to calling that a session containment level, but because we're coming off of long-term support right now, assuming we rally off of this area, I just want to keep it pretty light. 231.59 in reach over the next few days, I will say, where we can top out on a daily basis. Overall, holding above this 214.19 level, we do have a descending channel top at 240.88, another session containment level, so forth and so on. I can zoom in here just a little bit. Holding above 214.19, I do see a 1 to 2 week target at 249.33. This is a new descending channel top where we can top out on a weekly basis. You can see up here. So for you 1 to 2 week swing traders, you're buying 214.19 at 215.41 and holding out for this descending channel top at 249.33. This channel top is dropping a couple of points a day, and by the end of the week will be in the upper 230s and dropping. So once again, it won't be such an accomplishment to reach this channel top over the next week or two. You could consider perhaps buying 240 out of the money calls that don't expire for at least a couple of weeks, because I think that is the play as far as this is concerned. But as I mentioned at the very top of this, it really is this 268.94 descending speed line. This will be in the lower 260s as we move into later week, so forth and so on. This is kind of our 3 to 5 week objective. Keep that in mind. I'll let you do with it as you may. You could reach for 260 out of the money calls that don't expire for at least. I would go once again a couple of months out on that. It's only going to take several weeks, 3 to 5 weeks to reach this upper area. I'm talking to options traders mostly. So bottom line, I'll remind you just the big picture, holding above 214.19, anticipating the 268.94 speed line over the next 3 to 5 weeks, and that 302.97 channel top once again over the next 2 to 3 months. Inversely, if we were to close below the 214.19 formation, and that obviously includes the 215.41 channel bottom, I think even a daily settlement this week, if we close today 213.25 or lower, I don't think you want to be long through the rest of the week. In fact, 3 to 5 day swing traders can play the short side down to 200.55, and then of course it'll be a Friday settlement, as I say, below 215.41. By that 1% margin of 213.25, that would set up for a 170s objective over the next 2 to 3 weeks, where the market encounters its next significant support threshold and meaningful downside pivot point through the rest of the year and into Q1, Q2 of next. I'll be outlining those objectives if that were to occur, but I just don't want to jump the gun on that because personally, I don't think that's going to happen. But we'll leave that for another video. I'm pushing 12 minutes here. Don't like to go that long. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of that free trial. I don't think you'll regret it. I'm going to be back, of course, with tomorrow's Tesla report on Tuesday. You have a great day.